Hey guys, it's Crossroads here. Today we're going to talk about PayPal. Excuse me, PayPal. It has been a pain. It's been an opportunity cost. Stop me if you've heard that before. PayPal, of course, reported earnings last week, and you wouldn't know it from the actual stock reaction, but it was very much a triple beat, and these were very good earnings. I call this going into earnings their last challenging quarter, and they actually exceeded my expectations for the most part. There was one or two things that they didn't. Nevertheless, the stock price absolutely tanked. And you can see here, of course, the stock price chart, it was nearly 80 bucks a share going in. Earnings crashed down to 67 a share, and it's at 68, just kind of holding tight despite really good earnings. So is this a buy? Is it a hold? Or is this a sell? And let's look at maybe why the market is selling it off and what I'm thinking about PayPal going forward as well. So on the first part, we can see as far as the ratios, valuation metrics, it's very attractive here, right? Price to earnings is 14.67, forward PE is 14.1. And I think that this is actually quite low. I actually think that the forward PE is closer to like 11, maybe, based on what I'm expecting for next year. And that could even be a little bit high. Price to free cash flow is ridiculous. Anything under 20 for price to free cash flow is usually a screaming buy, but not always. Price to sales doesn't really matter that much, but it's very low as well. So the problem with that is you have to go as an investor more than just looking at these valuation metrics. Not everything that looks cheap actually is. And I want to show you this real quick. This is Western Union. Western Union, if you think PayPal is cheap, again, you're looking at 14 PE, price to free cash flow 12, no dividend either. And Western Union, yeah, it has an 11% dividend, which is insane. Price to earnings is 3. 3 price to earnings, forward PE 4.68 because, well, we'll talk about that in just a second. Price to free cash flow is ridiculous. Price to share, whatever. So even price to book is down to 3. And this stock price is at $8. And you can see year to date, it's continued to decline. Over 5 years, it's continued to decline. Now, why am I not talking about Western Union as the company to buy? Is because we go deeper than just this. If we are looking at valuation metrics, Western Union absolutely would be buy. Maybe it is. Maybe it isn't. The problem is what Western Union is they're being disrupted. Of course, most of their business is international remittances, and there's been a lot of hungry companies that have come after their cheese. Wise is probably the most prominent. Of course, PayPal Zoom is no slouch, but there's a whole bunch of others like Rio and Stablecoin now, as well as PayPal World. And all of these things are better, more well-positioned competitors. Now, is still a use of Western Union. They're not going to go away overnight, but they are very much in decline. And you can see that here. Revenue growth year over year is slowing. Profits are declining. 3-year profits growth and revenue growth going down immensely. That's really not what you want to see. Could they turn it around? Maybe. But when a company is completely being disrupted and displaced, it can look very cheap and yet actually be very costly and expensive. So is PayPal Western Union? Are they being disrupted? There is some disruption. I will say this. The bears are right when they say, hey, there's a lot of competition in this space. They're absolutely right. Payments, especially pure payments, is a very crowded space, and it gets more crowded all the time. Stablecoin is probably the biggest or most recent disruptor. It's not. I'm very bullish on stablecoin. A lot of people are like, oh, it's going to kill all payments in like 2 years. No. Or like, hey, it's never going to take off and nothing's going to happen with stablecoin. Also wrong. It is a disruptor. But again, every single one of these payments companies is going to have their own stablecoin or at least be using one very actively. We've seen that with MasterCard. We've seen that with Visa. We've seen that with Fiserv. And of course, PayPal was the OG of a payment company that actually had their own stablecoin launching back in August 2023, although the market seems to have forgotten that. Now, so PayPal, is it actually a credible buy? And why is it selling off? So if you look at PayPal, it looks different than Western Digital, right? It's still growing revenue. Now, this is still slow revenue growth. And we're going to talk about why that is, but what we're expecting as well. Profits growth is up immensely. Part of that is because of their buyback program, but Western Union also has a buyback program. This is more than just simply buying back your stock. You do not get 20% EPS growth from just that alone. They've also fixed and resolved a lot of their margin issues, which is a big part of it. And the growth that they have is driving transaction margin dollar growth, which is actually accretive to the bottom line. So are they going away? PayPal hit all-time high for active customer count. Now, is this insane growth? No, but if they pick up, 2 million new customers each year, and I actually think it's going to be a very nice spike in this quarter as well. That's going to be a very good thing. Fastlane is one of those drivers, certainly. They mentioned that 75% of the people that are using Fastlane, and again, it's just in its infancy, are either dormant PayPal users, not active users, or brand new to PayPal as well. So that's a growth driver. The Venmo partnership with Big 10, Big 12, that's going to be immense, I think, in the quarter three. And you're going to see this. I mean, it's not going to be like crazy, ridiculous numbers because we're talking about 438 million people. But I wouldn't be surprised to see this at like maybe 442 or 443 even. And the monthly actives are also looking very good as well. Total payment volume. There's always some seasonality as well. Quarter four is usually their peak just because of the nature of Christmas. They're still growing on that, and that's going to accelerate. It's Braintree headwinds to go around. Transaction margin. This is maybe one of those things that the market looked at and they didn't particularly like. If you see, we were on an upward trend, and this is great, but we've seen times in the past where transaction margin dollar, especially in quarter two, is just a little bit softer as well. There is a little bit of seasonality here too with quarter four, although this one's not nearly as impacted. So now if we see next quarter this go from 46.4 down to something a lot lower, that's when we ask questions, not a one-off quarter. We also don't get too excited when it jumps up for one quarter because you can read too much in a single quarter. Revenue segments, we can see that this continues to increase as well. Net income is looking okay. They did have some extra expenses quarter as they basically realized most of their marketing expenses in a single quarter, but it doesn't look like it's deteriorating at all. Now, this is probably the other place where I saw, honestly, it underperformed what I expected immensely. Now, if you recall, PayPal guided for $6 to $7 billion of free cash flow this year. Let's look at this on an annualized basis just so you can see what they've been doing in the past. Alex Chris came on in late 2023, and you can see this yellow line free cash flow had been deteriorating the whole time. Operating free cash flow as well. And then we had a ridiculous quarter four, and they're guiding for the same, 2024 rather. They're guiding for the same in 2025. If you look at it on a monthly basis, or not monthly, but quarterly basis, there's a lot of noise, especially because of the seasonality of quarter four. And so I expect that we'll continue to see that. You can read too much into a single quarter like this. And also back here when they had some timing issues with selling the buy now, pay later loans to KKR. But you can also read too much when we're going to get some quarters like this. So am I worried about free cash flow? I would be if this was a company that tended to overpromise and underdeliver. Yet this is actually the opposite of what we see. So let's look at what they're expecting as far as free cash flow. And they actually mentioned this a number of times for PayPal as well. Here it is. Raising full year 2025 transaction margin dollar EPS guidance, reiterating 6 to 7 billion in free cash flow guidance. So yeah, they said this actually twice in the slide, once during their earnings call itself, and once when an analyst asked the question as well. So if this, again, was a company that overpromised and underdelivered, I would be very concerned, but that's the opposite. So if we look at this, I mean, they put up, basically a little over $1.5 billion in free cash flow in the first half of the year. If they hit $6.5 billion, that's going to be maybe the largest free cash flow they've ever received in a quarter back to back. Again, when they post those numbers, I don't think it's an if. Don't get too excited in that. Now, it's still pretty exciting if you look at it over the full year standpoint that they're actually crushing and killing it. But this doesn't mean that we should expect $2.5 billion every single quarter going forward for PayPal. I wouldn't expect that. Probably $2 billion quarter three, maybe $3 billion in quarter four for their highest ever. But that's going to be something to pay attention to. And I think maybe that's a little bit of the reason why the market sold off PayPal. But I think largely also it's because they see PayPal as something that's being disrupted by stablecoin. Yet that is just not the case. You don't see it in the numbers. You don't see it in the metrics. Now, could that happen in the future? It's really unlikely because of the defensive measures that PayPal took. They launched, again, Pay with Crypto, which is it's a very small take rate. There may be some margin compression there. It's not like a amazing, bullish, the best product ever, but it basically puts them in a defensive posture. And why would you use something new like Pay with Crypto through Coinbase when you have PayPal and all the suite that PayPal comes with it for actually a slightly lower take rate, doing the exact same thing, instant settlement programmed. It all works very seamlessly. Doesn't make sense to me. PayPal World was also one of those defensive posture things as well, where they've combined with a whole lot of the other massive wallets out there in the globe, which will reach 2 billion people. That's going to be defensive over the next 2 quarters as that they basically finalize those things and they launch them. But in Q1 of next year, that's going to be a significant revenue driver for Venmo, as Venmo can be used anywhere PayPal can be used globally. Again, that's just a United States thing, but now it's able to be used throughout the globe, anywhere PayPal is accepted, as well as, I believe, anywhere that any of these other payment providers like Mercado Pago, that wallet, is used as well, which is a great thing for us Venmo users as well. So let's look lastly at just a couple of things from the earnings call that stood out to me too. So here's those numbers, and you can see that the actual mix of everything that is PayPal, it's weak and really exceptionally weak in one area. This was Q1 and then Q2 as well, the current quarter. Payment service provider, this is mostly Braintree. Braintree, they specifically mentioned that they were changing volume on the top line, which is why we're not seeing this kind of growth for Braintree in exchange for margins, which is why we're seeing this, but we're also seeing margin improvement for PayPal as well. So this is weak, but it's known to be weak. And it's interesting what they also said elsewhere in the quarter. Now, branded is 5%. I'd like to see that at least 6 to 8%. I do think that we'll accelerate there as well. We do see that I think there's a good likelihood that we'll see that. But the biggest driver of growth is going to be this Venmo specifically. We've seen a lot of increase and acceleration as well for these quarters. This is Q2 2025, 12% growth, so 8%, 10%, 12%. They actually mentioned Venmo was up by almost 30%, but it was because of a one-time thing. They didn't want to factor that into Venmo to give people the wrong idea. In Venmo, it is accelerating, it's growing, and it actually translates to the bottom line as well. Now, if we look at what they actually have guided for as far as Braintree, which is slowing that top line growth, it actually slowed the top line growth. They would have had 10% revenue growth this year if not for this intentional slowdown. This is what it looks like in chart form, that they're growing nicely here again. Last year, slowed down in Q3, was basically flat in Q4, negative in Q1 in terms of Braintree actual growth. That's why they had such a soft number last quarter, flat in Q2, and yet they grew 5% anyway, despite that 5% headwind. Almost all the headwinds are gone by Q3, and then reacceleration of growth. Again, they've made these a little bit different because we haven't had those quarters yet. But don't be surprised if PayPal gets close, maybe 8-9% top line revenue growth by the end of the year. Is that the fastest growing company out there? No, but it's priced like it's a dying company going the other direction. That's not the case. Now, next year, I do think that they also hit double-digit revenue growth. That doesn't mean 20%. That might mean 11, 12. 14, maybe even 15% if things go exceptionally well with advertising, which I think that they might. There's a lot of growth drivers out there for PayPal. There's a lot of indications, just like across the line. Monthly active users continue to be up. Payment transactions are actually down again because of Braintree. But it seems like everything is going very, very well for PayPal. They've launched a whole suite and mix of a lot of different things that they've launched out there. A lot of new initiatives, rather. And so it's an exciting time, I think, to be a shareholder, but we'll have to see what they'll put up for Q3. Again, I think Q2 is the last challenging quarter. They reiterated a lot of things that show the strength that they're at and what they're expecting in the near future. This is a company that under-promises and over-delivers time and time and time again. And I think that we'll see that in Q3 and Q4. So where does PayPal go from here? Yes, I'm calling it PayPal for this reason. We can see it has been very painful. PayPal is down about a little over 20% this year. That's terrible. We're in a bull market where a lot of stocks have gone up. Now, the best thing to do is compare it to the index, and it should outperform the index if it's a healthy company and things are going well. They'll want to over a short term and even over several years, it can underperform. But this is not good. This is not good at all. And we can see that payment sector has been kind of rough as well. So Adyen is kind of the king of the crop. It's a pure payment service provider. It's actually up about 20% over the year. I didn't want to just show everything as gloom and doom, But you can see PayPal is in good company. So what are these out here? Well, you can see this right here. Fiserv is this orange line. It's actually down 36% in the last or year to date. They have been absolutely slaughtered. They reported really good earnings and they got sold off. Stop me if you've heard that before as a PayPal investor. Shift 4, really good, well, actually not as good earnings. They missed revenue growth. They missed EPS as well. Though they did raise their guidance and they're a very good company, they're down by about the same as PayPal, sold off very hard after earnings as well. So this is kind of a tough spot for payments. You can see this in MasterCard and Visa as well, where there's a lot of uncertainty where they're going. A lot of this, the market is perceiving a lot of disruption by, of course, stablecoin and other headwinds as far as tariffs as well. So it could be a time period where PayPal just continues to be range bound. Now, I don't think it's going to be stuck at $68. You know, we could well go back to $80 a share, $90 a share, $100 a share by the end of the year. It's possible, especially with really good earnings. And I think that they'll put that. But I really think it might just be a little bit of a waiting game until we have the next quarter. For whatever reason, the market did not like it this quarter. And if what it's concerned about is margins, I think that changes next quarter. If what it's concerned about is top line revenue growth, that only improves next quarter as a Braintree headwind shifts away. And if it's really concerned about free cash flow, they're going to put up some really good numbers in the next 2 quarters as well. I think as they issue their quarter 4 guidance or results rather in January for the next year, as we continue to see advertising like really ramp up, it's just in its infancy, and a lot of their other ventures get launched as well. There's going to be a lot of growth here that the market has not priced in because it's written off PayPal as kind of another Western Union as well. So what am I doing with PayPal? I am not adding. I'm not adding at all. You might say, well, why aren't you doing that? Because you're bullish on PayPal. It's because I have a lot of PayPal. I did buy a tiny bit, but it was not a meaningful add. And I might do that from time to time. But again, it's overweight in my portfolio. If PayPal goes to zero, which it will not, I mean, growing profitable companies don't go to zero. But it's hypothetically, I'm like, okay, that's more money than I'd like to lose. So at some point, you have to say, okay, I think the market's wrong, but I'm not willing to put any more on the line. And that's where I'm at with PayPal. Now, if I get a lot of money coming into the market, if I have a lot of others that outperform and it's a smaller piece of my portfolio, that's when I'll add. Or if things get even more stupid, which they might, if PayPal is trading at $50 a share, $40 a share, which would be, I mean, it's already crazy, but that would be absolutely wild where they're basically buying back half of their float in the next 2 years. Yeah, I'll take a bigger position there. Thank you very much. But it's been painful. It may be painful for another quarter or 2, but I think that we're nearly out of the woods with where we're at as far as management. And you never really can tell where things will flip and when the market will change its mind. Short term, stocks trade on a narrative. Long term, it tends to follow the fundamentals. And right now, it's just kind of in between that turnaround. And we're going to see that reacceleration here starting in quarter 3. So there you have it. That's what I'm thinking of as far as PayPal. Where are you at with PayPal? Are you saying, hey, I'm never touching this stock again. I've been burnt. I can't blame you. If you're saying, hey, I'm going to get out of it completely, again, I can't blame you. It's been painful. It has been an opportunity cost. Will it going forward? We'll have to see. Anyways, thank you guys for watching, commenting, and subscribing. And until next time, happy investing.